Kaspa was supposed to be the blockchain that changes everything, the fastest proof-of-work network ever built, a fair launch with no venture capital puppeteers pulling strings, a community so loyal they'd probably name their firstborn child Cas, and yet, the price, down over 70% from its all-time high, from 20 cents to nickel territory. So what's actually going on here? Is this the biggest missed opportunity in crypto right now, or are we watching a slow-motion train wreck? Stick around, because what I'm about to show you might completely change how you see this project. Welcome back to the channel, everyone. If you're new here, I break down crypto projects with zero fluff and maximum insight. Hit that like button right now, smash subscribe, and turn on notifications because we're diving deep into one of the most confusing price crashes of 2024. Let's get into it. Kaspa wasn't just another meme coin riding hype waves. This thing had real innovation. We're talking sub-second block times, a unique directed acyclic graph structure combined with Nakamoto consensus, and transaction speeds that make most layer 1s look like they're running on dial-up internet. According to analyst Raajeev Anand, Kaspa represents a true proof-of-work beast in a market drowning in recycled narratives. The technology is legitimate, the community is passionate, the roadmap includes smart contracts and scalability upgrades. So why is the price telling a completely different story? That's the million-dollar question, literally. After hitting an all-time high of roughly 20 cents in 2024, KAS token now hovers around 5 cents. That's a 70% drop for those keeping score at home. Over the last 14 weeks alone, it shed more than half its value. Now, I know what you're thinking. Maybe the tech wasn't that great after all. But here's where it gets interesting. The development hasn't stopped. The network keeps processing transactions faster than you can say Ethereum gas fees. Smart contract functionality just rolled out. The fair launch model means no venture capitalists are dumping on retail holders. Everything on paper screams undervalued gem, yet the market is treating Kaspa like yesterday's leftover pizza, cold, unwanted, and pushed to the back of the fridge. So what's really happening? 3 factors are creating this perfect storm. First, we've got Bitcoin trading sideways for months, and, honestly, when Bitcoin sneezes, altcoins catch pneumonia. Kaspa is no exception. Second, capital rotation is brutal right now. Investors are chasing artificial intelligence tokens and restaking protocols like they're hunting Pokemon. Proof-of-work projects, no matter how innovative, aren't getting the spotlight. Anand makes a sharp observation here. Sometimes the market sleeps on the loudest future. Translation: the crowd is distracted by shiny objects while genuinely innovative projects get ignored. Third, and this one's crucial, Kaspa's fair launch model is both its greatest strength and its current weakness. No major exchange listings pushing volume, no aggressive marketing campaigns because there's no venture firm bankrolling publicity stunts. It's refreshingly honest in a space filled with smoke and mirrors, but honesty doesn't automatically pump prices. Here's my take. Kaspa's paying the short-term price for long-term integrity. Most projects would kill for this kind of technological foundation, but they'd also have 10 times the marketing budget. Let me break down why this price action might actually be setting up something bigger. Another analyst, Y.Stan, drops an interesting comparison. He notes that if Bitcoin took a decade to make early believers rich, Kaspa might only need until 2027. Now, before you mortgage your house, remember that's speculation, not financial advice. But the logic holds weight. Kaspa launched fairly, builds consistently, and operates in a niche where speed and security actually matter. Most proof-of-work chains are either too slow or too centralized. Kaspa solves both problems simultaneously. The technical development deserves more credit here. We're not talking about vaporware or white paper promises. Kaspa's block times are legitimately under 1 second. Transactions confirm almost instantly. It's the fastest proof-of-work network currently operating, which makes it a genuine innovation in a space where most innovation is just repackaged Ethereum forks with different logos. For context, Bitcoin processes about 7 transactions per second. Ethereum does maybe 15 on a good day. Kaspa, it's operating on an entirely different level architecturally, but technology alone doesn't move prices in crypto. We've seen this movie before. Superior tech loses to superior marketing constantly. Remember Betamax versus VHS. The better technology lost because distribution and marketing matter. Kaspa faces the same challenge right now. The project builds in silence while noisier, less impressive projects capture headlines and trading volume. Anand suggests Kaspa isn't down, it's winding up, implying accumulation by long-term holders. Here's where market psychology gets fascinating. After Kaspa's strong rally earlier in 2024, profit-taking was inevitable. Short-term holders cashed out gains, which is honestly completely rational behavior. Combine that with overall weakness across mid-cap altcoins, and, well, you've got sustained downward pressure. The question becomes whether this represents genuine disinterest or just a temporary rotation away from proof-of-work narratives. My honest assessment? Probably both. The market is genuinely distracted right now, but that doesn't mean Kaspa's fundamentals have weakened. So, what could trigger a reversal? Major exchange listings would help significantly. More liquidity means more discovery, which means more potential buyers seeing what Kaspa actually offers. Broader interest returning to proof-of-work blockchains would also help, especially if environmental concerns around Bitcoin mining ease up. So, smart contract adoption on Kaspa's network could actually create real utility demand for the token, moving things way beyond just pure speculation. When you have real transactions that require KS, that fundamentally changes the whole supply and demand dynamics. And, the fair launch narrative really deserves another look too. In an industry that's honestly plagued by insider dumps and all kinds of venture capital extraction schemes, Kaspa stands out as something that's become pretty rare genuine community ownership. There was no pre-mine, no venture allocations, no team tokens unlocking at convenient times. That kind of authenticity, well, it builds trust slowly, but it builds it really solidly. Just think about Bitcoin's early days for a second. There was a similar fair launch, similar skepticism, and yeah, a similar kind of patience required. Kaspa isn't going to become Bitcoin, but honestly, it might not even need to. Look, I'm not here to tell you Kaspa is guaranteed to moon, or guaranteed to fade into obscurity. What I am telling you is that the current price action doesn't match the technological reality. Whether that disconnect represents opportunity or warning depends entirely on your risk tolerance and investment timeline. If you're chasing quick flips, Kaspa probably isn't your play right now. If you're willing to wait while fundamentals slowly get recognized, it might be worth deeper research. Thanks for watching, everyone. If you enjoyed this breakdown, check out my other videos on undervalued layer 1s and market cycle psychology. Drop a comment below with your thoughts on Kaspa. Are you buying this dip or staying away? Hit that subscribe button, and I'll see you in the next one. Quick reminder, nothing in this video is financial advice. Cryptocurrency investments carry significant risk. Prices can drop to zero. Only invest what you can afford to lose completely. Do your own research, consult financial professionals, and never make decisions based solely on YouTube videos. Stay safe out there.